Is your hard-earned money burning away without you even realizing it? Inflation can silently erode the value of your money, leaving you with less purchasing power over time. But fear not. In this video, we'll show you how to protect your money from the devastating effects of inflation. From investing in assets that appreciate in value to avoiding low-interest savings accounts, we've got you covered. Don't let inflation take a toll on your finances. Tune in now to learn how to master your money and keep it safe from inflation's grasp. Why is inflation a problem? Inflation can be a problem for many reasons. One of the main problems with inflation is that it erodes the purchasing power of your money. As the prices of goods and services rise, the amount of goods and services you can buy with the same amount of money decreases. This can make it difficult to maintain your standard of living and achieve your financial goals. Inflation can also lead to an increase in interest rates, making borrowing more expensive and potentially slowing down economic growth. If you have debts with variable interest rates, the cost of servicing those debts can increase during times of inflation. Inflation is rising at an average rate of 2.4% per year. If something cost $100 last year and is now $103, the inflation rate has increased by 3%. Investing during times of inflation. Now that we understand what inflation is and why it can be a problem, let's talk about how to invest your money during times of inflation. Invest in assets that appreciate in value. One way to protect your money from inflation is to invest in assets that appreciate in value. This includes things like real estate, stocks, and commodities. During times of inflation, the value of these assets tends to rise, making them a good hedge against inflation. Real estate can be a good investment during times of inflation because property values tend to rise with inflation. This means that if you own property, its value may increase over time, which can help offset the effects of inflation. Stocks can also be a good investment during times of inflation. As the prices of goods and services rise, companies may increase their prices, which can lead to higher profits. This can translate into higher stock prices, which can help protect your purchasing power. Commodities like gold and silver are often viewed as a safe haven during times of inflation. As the value of the dollar decreases, the value of these commodities may increase. This can help protect your purchasing power and potentially even provide a profit. Invest in inflation-protected securities. Another way to protect your money from inflation is to invest in inflation-protected securities. These are securities whose principal and interest payments are adjusted for inflation. Examples of inflation-protected securities include Treasury inflation-protected securities and I-bonds. TIPS are bonds issued by the U.S. government that are designed to protect investors from inflation. The principal value of the bond is adjusted for inflation, which means that the value of your investment increases with inflation. In addition, the interest payments on TIPS are also adjusted for inflation, which means that your income from the investment also increases with inflation. I-bonds are savings bonds issued by the U.S. government that are also designed to protect investors from inflation. The interest rate on I-bonds is adjusted for inflation, which means that the return on your investment increases with inflation. Invest in foreign currencies. Investing in foreign currencies can also be a good strategy during times of inflation. If the inflation rate in your home country is high, investing in a foreign currency with a lower inflation rate can help protect your purchasing power. For example, if the inflation rate in the United States is high, investing in a currency like the Swiss franc, which has historically had a lower inflation rate, can help protect your purchasing power. However, investing in foreign currencies can be risky and should be done with caution. Invest in dividend-paying stocks. Investing in dividend-paying stocks can also be a good strategy during times of inflation. As the prices of goods and services rise, companies may increase their prices and profits, which can lead to higher dividends. This can help offset the effects of inflation and provide a steady stream of income. However, it's important to note that not all dividend-paying stocks are created equal. You should do your research and choose stocks that have a strong history of paying dividends and a solid financial position. Avoid keeping too much money in low-interest savings accounts. Finally, it's important to avoid keeping too much money in low-interest savings accounts during times of inflation. While savings accounts are a safe place to keep your money, the interest rates are often lower than the inflation rate. This means that the purchasing power of your money is decreasing over time. Instead, consider investing your money in assets that appreciate in value, inflation-protected security, or dividend-paying stocks, as we discussed earlier. In conclusion, inflation can be a problem for your finances, but there are strategies you can use to protect your money. Investing in assets that appreciate in value, inflation-protected security, foreign currencies, dividend-paying stocks, and avoiding low-interest savings accounts are all ways to protect your money from the effects of inflation. However, it's important to note that investing always comes with risk, and you should do your research and consult with a financial advisor before making any investment decisions. Thank you for watching this video on how to not get caught by inflation. And we hope you found this information helpful. Don't forget to subscribe to our channel for more financial advice and tips on mastering your money.